Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from TheTechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, again, the stock market's a couple of brilliant days and some big dives. What's your opinion of this pattern?
Yeah, well, we're into this really big volatility kind of type session, much like we saw back in January all the way through till May. And I think we're going to continue to see some pretty big price swings. Now, with that being said, I do feel like volatility is going to fade off and diminish, even though we're going to have big price action. And the reason that will happen is because when prices rally, we usually see volatility, the volatility index, the VIX, fade back down, fall in value. So I think we've got potential here for a really strong rally in equities to bring us back up to the highs that we saw really only about a week and a half ago. And that'll bring the VIX back down to a lower end of the range. It'll bring us into Christmas, the holiday season here, and we could end up with the year having a fairly good run. So it's going to be really interesting how price oscillates, but right now, if you look at the SP 500, it's trading in a really clear trading range, more or less between 2,800 and just above 2,600. So it's got a 200-point range, which is big, and I think we're going to continue to see it trade in that range. And right now, we're at the lower end, and I think by the end of the year, a couple weeks from now, we'll be back up at the upper end of that range.
So are we going to be experiencing what they call a Santa Claus rally?
It would be nice. It's kind of what the markets look to be set up for. It would end the year on a good note. Who knows what January will bring? It could be pretty interesting. Last January was, and January and February were pretty bad in the markets, but, yeah, I do think we're due for a holiday rally here.
Now, in the last couple of years, we had the January, February dips, and so many people were scared that was the start of a big crash, and yet the markets bounced back. Do you think that same thing could happen again in this cycle?
I do. If the markets unfold the way I have a feeling they might unfold, I have a feeling we're going to see the equities markets start to rally, maybe go back and test the highs that we saw back in September around the 2,900 mark, maybe even grind up to some higher highs. And then come January, February, the markets could go into another one of these big beginning of the year sell-offs. And really, if you look way back at the chart, zoom back a couple of years, that would put us into a really big head and shoulders topping formation. And there's a lot of signs there, technical reasons. The market is looking like it's on its last third of the market here, where it's going to roll over and crash in 2019. And this is what you and I actually talked about last December, is that this coming year, 2018, was going to be high volatility. There's going to be big waves of distribution selling, and 2019 to 2020 is going to be could be a bloodbath in equities. And I posted an article showing some long-term cycles, and it shows come January, February, we're going right into a downward cycle, and it shows it, a big move right to the end of 2019, all downward bias for next year. So it's going to be, this year was volatile. Next year could be not just sideways chop, but never-ending selling. It could be a bear market.
With that kind of a warning, do you think people should be making preparations now instead of waiting for it to happen?
I do. I think we're really close to, I don't think you should be putting any new market into the money, or any new money into the market. I thought that going into 2018, I figured it's going to be a very volatile session. across the board. And that's what we've got. And really, we're not that far away from being in a technical bear market. We're trading down near these lows. We only have 150 points to the downside on the SP 500, which is really only one or two bad trading sessions away. And we are threatening for a technical breakdown, and that would start a bear market. So, we are at support. We're holding our ground. We're still in a bear market. But, all the signs are there and that things are coming to an end, and we are close to breaking down. If it does break down, you really got to get out of equities. Cash, there's nothing wrong with sitting cash rich and picking up all your favorite companies or ETFs that pay high dividends when everything's, been cut 50% value. It's best just to sit in cash if that happens.
We'll have more with Chris Vermeulen right after the break.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZB. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, crude oil, will the OPEC cuts help boost the price, or will the shale producers in the U.S. just counter that with more oil?
Yeah, tough to say. I don't follow what OPEC and those guys do a whole lot. I really follow the technicals, so it's hard to say what's going to happen. But, based on the price action of where crude oil is right now, it's clearly in a downtrend. Every time it has a little pop in price, it's just getting stepped on. People keep selling into crude oil, and today is another one of those down days. And really, crude oil is just treading water, holding its head above the surface here before it breaks through and goes for another leg down. So I don't know if the news is really helping crude oil at all at this point. Really, it's on a technical standpoint, it's showing absolutely no strength, and it's on the verge of another breakdown. So I'm fairly bearish here with crude oil until it can show some signs of life. Has to close above $54 per barrel.
Has natural gas been a whole lot more encouraging?
Natural gas, depending on how you look at it, it's been encouraging in terms of today it's having an actual breakdown out of a multi-week pattern here. Today we've seen a breakdown from a bullish pennant formation, which is a sign that we could see several down days in natural gas. And I talked about this actually yesterday with subscribers saying, we were at the apex. This price action had a big wide range, and it's been slowly trading sideways and narrowing. So it's got higher lows and lower highs, and it creates this wedge, this triangle. And it got right into the apex where there was no room for natural gas to move on the chart. It had to break out in one way or the other. And that type of formation causes a series of lower highs and a series of higher lows. And whichever way it breaks, every time it breaks one of those little previous lows, it triggers sell orders, stop orders to trigger, and creates another drop. And because price action has moved into that formation, there's all these little levels layered right underneath each other. So it doesn't matter which way natural gas breaks. Once it starts to break out, it triggers one after another, after another, after another, and you can see like a 2 or 3 day move that is huge in price of percent-wise. And that's what we're seeing today. Price broke to the downside. We've broken a couple of these little short-term pivot levels today. Natural gas down almost 7%. And there's a couple more of these levels, not too far below it, that once it triggers, it's going to create some more waves of selling. So I am bearish on natural gas. It's broken down today, and I think it's going to be under pressure for a while. I think, overpriced, a lot of news-based and weather-based upward momentum, and it's just simply fizzling out.
We'll have more with Chris Vermeulen right after this.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTC QB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's your outlook for precious metals?
Yeah, precious metals have been, they've been struggling for a while, depending what you look at. Gold has been doing fairly well simply because it's kind of seen more as the average Joe's, kind of safe haven play. When people get nervous, they're like, I'm just going to buy some gold. And so gold has outperformed gold miners. It's outperformed silver. So gold's got this nice upward kind of bias. Nothing huge in terms of percentage wise, but I mean, it's been doing fairly well considering gold miners are still trading kind of down near the lows. Same with silver. I do feel as though we are on the verge of seeing a really nice move in the overall precious metals sector. When we look at gold miners, they're forming a beautiful kind of, you could argue, a double bottom formation or a W formation. Today we're seeing some life in precious metals, and I think we're really close to starting to see a big move up. And typically what happens is the last 1 or 2 months of a bull market, just before it flips to a bear market, which is what I think is going to happen next year, we usually see precious metals perform really well. And it's only for a couple months, because when the bear market hits, everything pretty much falls. You see precious metals get hit, gold, silver, they all fall. So I am bullish on precious metals. All we need is a little more price action to the upside, some breakouts, and I think it's off to the races for a month or two as the next kind of flow of money into the equities market. So I do like the precious metals here, but they haven't yet really performed and broken out. And silver's still lagging, but silver is very close to actually having a breakout above the $15 per ounce level, which if it does, is going to trigger, I think, a lot of buying. A lot of people are watching silver, waiting for some signs of life, that there's some money moving in behind it, but it hasn't seen it yet. But it's creeping up to that breakout level. So I think there's some fireworks to be had in the precious metals sector over the next 2 months.
Were you surprised that silver wasn't more popular, considering it's not just a precious metal, it's an industrial metal used in solar panels and the construction of computers?
Yeah. Naturally, you'd think silver would be doing really well because it does have a pretty big industrial sector to it, or use for it. But, it hasn't really moved that way. You really haven't seen any of that demand. It's just been slowly stair-stepping its way down year after year after year. And right now we're at the upper end of this step. And it needs to break above this upper range here for it to actually start stepping its way back up. So $15 per ounce is a really important level that if we can close above there on a daily, weekly, and even a monthly level, those are signs that, okay, looks like silver is now starting an uptrend, and this could be the start of something fairly decent. And silver is kind of one of those sleepers. You never really know when it's going to pop and how far it's going to go. And sometimes it can lag gold in miners, and then suddenly one day gold and miners are kind of dull, and silver just rips to the upside for 5 or 6 days, and you see these massive moves. So silver is really tough to gauge, but the chart looks very similar to the gold miners, and they're really close to breaking out. It's just it hasn't done it yet.
One silver analyst said he told his son, you should buy an ounce of silver every month because when it does break out, you're going to have a huge gain, and apparently his son paid for his college education that way. Is that good advice for people who want to maybe invest just a little money at a time?
I think it's brilliant. I buy silver rounds. I love it. It's addicting to own precious metals and have physical rounds, on hand, and silver's so cheap. I'm sure there's programs out there where you can accumulate it probably monthly and have a couple coins sent to you or a coin sent to you once a month. It's $15 or $20. It's not the end of the world, but I mean, if that thing goes up to $100 an ounce someday, you've accumulated some serious wealth with very little amount of money, and really it's a couple cups of coffee, and you've got this little investment plan in place. So I think if you can accumulate, a couple cheap rounds every now and then, why not? It can't hurt you. It's an insurance plan. It's a commodity. It has some value. So, it could have a lot more value, down the road, and it probably will. So it's, way better than, cut back on one meal or a couple drinks and you can, have your own little plan and play.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Our popular YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.